Hey man, what's going on everybody? It's been a while since I've gone live, but man, is there a lot going on in the markets? We got a lot going on, a lot of red days, a lot of selling, tech sell-offs, all that. A lot of companies going through AI transitions as we see. Clearly that's a big focus in the market. And yeah, I mean, at the end of the day, you know, there's a lot of geopolitical things that are going on at a broad level scale, right? There's a lot going on as it pertains to figuring out kind of what's going to happen with interest rates. Interest rates obviously came down last month. With this tech sell-off and everything that's happening, there's just shakeouts, right? Everything's been at all-time highs. The markets have been inflated for a very, very long time. So much liquidity, so many dollars being injected into the system. That's definitely for certain. That's definitely for sure. But at the end of the day, like we always talk about here on this platform, it's about understanding the big macro picture, understanding what's going on from a broad level, not just understanding or not just reading headlines, but really trying to understand what's the bigger picture. What are we seeing? I think for one, we're seeing that all of the consolidation within the market that has been focused on tech over the past 10, 15 years is very apparent, especially when you think about AI and all of the money that is essentially being invested into these companies. There's some individuals that believe AI is a bubble. There's some individuals that believe AI is going to eat software and just eat everything. I think AI does have extreme potential, and it is going to lead to AI eating a lot of software based off things that I know, conversations that I have with different individuals in the space. But at the same time, there are going to be a lot of companies I think that get shaken out just because the valuations don't make sense. There's some companies that may be private companies that are pre-product, no revenue, with insane valuations. So of course, with anything, there's going to be consolidation. There's going to be companies that get shaken out just because that's a natural progression within the market. But the fact remains is that right now rates have been extremely high and they will come down. When rates come down, that means more liquidity will be injected into the market. The Federal Reserve made that very clear. Jerome Powell, made that clear. They've made it clear that they are moving from quantitative tightening to quantitative easing. And typically when you see quantitative easing, which is essentially more money being pumped into the market, that was during times of needed economic stimulus based off of problems that were caused by greed. But that's a whole nother conversation for another live. Whether it was post 2008 with quantitative easing coming in to essentially save the markets, or during COVID with the lockdowns and the market sell-off, with them injecting a bunch of capital into the market to essentially prop up the debt-based system. So essentially, because the system is being propped up by dollars that are printed out of thin air, it's inflating everything in the market, right? So that's one thing that a lot of people don't understand, right? One thing that I really try to communicate to individuals is that we all get paid in dollars, right? I live in America, right? Say most people here live in America, you get paid in dollars. When you get paid in dollars, when you get paid in currency, and that's the medium of exchange that you receive for your work, when more dollars are injected into the system, that means that the price of things goes up. That leads to what's called monetary inflation as well. There's price inflation, there's monetary inflation. Most people don't understand that aspect and that component of the monetary system. The only way for the system to essentially perpetuate is if more money is created, more debt is created, more cash, more liquidity is pumped into the market. And when that happens, it inflates the valuations of everything. It inflates the valuations of the stock market. It inflates the valuations of real estate. It inflates the valuations of everything in the market. And essentially, it consolidates and focuses a lot of the money and wealth within the individuals that own the most assets. However, what we're seeing now is hard money assets, gold in particular, silver, Bitcoin hit record highs not too long ago. Obviously, there's been a decrease in the price, but when you understand sound money versus paper, you can kind of see that a lot of what we see within a debt-based system is essentially liquidity being pumped into the market to inflate assets. Now, when you think about what's going on with gold, particularly over the past decade, you have a global reset, global resets. Essentially, what has typically always been the case is that countries would buy treasuries. They'd buy treasuries. They would buy these U.S. treasuries. They would have debt. And by owning debt, by having debt, which is backed by the full faith of the United States government, that essentially means that all those countries that are importing goods, right? Exporting goods to America, and America's taking those goods and then selling them to consumers within America. Those same countries are then taking those dollars and then buying United States assets. We opened up the markets to all those individuals that had all of the treasuries and all that cash dollars that have been exported to the world, exporting the inflation to the other countries. So essentially what happens is all that money flows back into America, and then it props up real estate valuations. It pops up domestic equities, etc. However, what happened decades and decades and decades in the making is a lot of central banks have been buying gold. Why? Because gold is a hard asset. Gold is a hard money. Most people will think about gold in a way in which it's a trade. No, gold is money. Gold is money because gold can't be debased. Back in 1971, every dollar that was in the system was backed by gold, And then when America went off the gold standard, Richard Nixon essentially made that mandate. The dollars are backed by nothing, right? It's backed by nothing. It's just paper. So essentially what you have is a lot of countries were buying gold, repatriating gold, wanting their gold back. Trump said that they were going to audit Fort Knox. Of course, that's not going to happen. We have no idea how much gold's in Fort Knox. But we do know that a lot of countries have been accumulating gold. Why? Because that means the goods that they are buying from other countries, they can settle that with gold. You have petro, the petro yuan, right? Countries that can essentially buy oil from other different countries pegged to the yuan, not maybe pegged to the dollar anymore. So all those treasuries that a lot of countries held for a long period of time, they're unloading them. They're unloading and selling the treasuries, which is essentially selling the debt. But the debt in the bond market is what props up the Ponzi scheme, the debt-based Ponzi scheme. A lot of people don't realize that. If you want to understand where markets are going, look at the bond market. Look at the debt in the system. If I want to go buy a house, most people want to go buy a house, they don't just go and use straight cash. They have to go get a mortgage. That mortgage is debt. When you go and get a mortgage, that bank then packages and securitizes the debt and then sells it. And then other foreign investors and people buy the debt. Hedge funds buy the debt and they trade and they make money on the margins. It's a fact, mathematical fact. But going back to the situation I was discussing in terms of gold being money, if countries can essentially trade and settle what they need to buy goods without having dollars, that essentially is decreasing the dominance and the country's reliance on the dollar-based system. Now, we obviously know that a lot of individuals and a lot of trade is still done in dollars, but the data shows that other large countries, especially countries like the Prce nations, Brazil, Russia, Iran, China, all these countries are hoarding gold. China has like the most gold out of most central banks right now. It's a fact, right? They're hoarding gold. And if that's the case, and as that continues to be the case, people will be able to trade with other hard monies in order to get the goods that they need. Thank you, bro. Thank you. Yeah, they don't really need dollars as much. So essentially what I always try to tell people is follow the money. Follow the money, but don't think about money as being the paper. Think about money being hard money. Gold is hard money. Silver is hard money. A lot of individuals see that Bitcoin is a harder money. Why? Because it is not printed out of thin air, right? It's not printed out of thin air. But there's comfort in some things that individuals feel like they know. There's comfort in things that people see in headlines. But you have to understand that headlines are all written with agendas and narratives, especially when it comes to investing in finance, especially when it comes to markets. So really what's going on right now is we're seeing an entire shift in the global world order, a shift in terms of how countries can trade amongst each other. Now, if we go back to what occurred maybe a couple months ago, all of this push as it pertains to the Genius Act, Clarity Act, all this crypto stuff, a lot of crypto talk. You guys may have heard of some conversations about stable coins and understanding what does that mean. And a lot of people have heard about stable coins, but essentially what a stable coin is it allows dollars, right, to be essentially put on chain, on a blockchain. Now, with the legislation that was passed by the Trump administration with the Genius Act, was essentially writing laws into place and regulatory frameworks that allows financial institutions to essentially issue stable coins. So let's say JP Morgan wants to essentially come out with a stable coin. That stable coin that they issue on the blockchain will be backed by what? A dollar, which will be backed by what? Debt, treasuries. So in a way, stable coins and all the legislation essentially that were passed, or that was passed, to essentially allow this to be put forward and allow financial institutions to come to the table with being able to put stable coins into the market, is a way to prop up the dollar-based system. It's essentially allowing individuals to be able to have dollars, but on a blockchain. But what does that lead to? More surveillance, more control, essentially perpetuating the debt-based Ponzi scheme. That stable coin is just as good as a dollar. Essentially what it really does is it onboards a bunch of people to the dollar system globally. Individuals that don't have access to financial markets in America. Somebody that may live in a remote country in Europe, or they may live in a remote part of Africa, or they may live in a remote country within Asia. And as a result, if everything's on chain, they can maybe have access to the United States equity markets by buying stable coins and then using those stable coins to essentially buy tokenized stocks, tokenized equities. There's a lot of companies, especially BlackRock, that have been open about the tokenization of the world. However, when you understand systems and you understand that paper is an illusion, whether it's a stable coin, whether it's a dollar, whether it's a yen, whether it's a euro, it's all controlled within a centralized control system. But this goes back to my initial point, that money, hard money, gold, silver, Bitcoin, those are hard assets that can't be printed out of thin air. Sometimes that may sound controversial to some individuals, particularly because they do not understand or they haven't done the research. They may think of gold as a trade because it's denominated in dollars. They may think of Bitcoin as a trade because it's denominated in dollars. You may think of silver, like, okay, well, I need more dollars. You want money. You want money and things that protect your purchasing power. If I have a bunch of dollars in my bank account and I know that, let's say I have $10,000 in my bank account today, in a year from now, that $10,000 won't buy me the same level of goods. So you accumulate more dollars, but the purchasing power of the dollars are debased. Why? Because more money and liquidity is pumped into the system, which is devaluing and debasing the value of all of your life's energy that you are earning day by day when you go to work. Period. Full stop. So at the end of the day, that's kind of really what I'm trying to get people to understand, right? It's understanding how sound money, how hard assets can essentially allow you to protect your family and to allow you to be able to really kind of store your purchasing power in a place that allows you to preserve your wealth over time. And then you can essentially build on top of that. It doesn't mean that you can't buy a stock or whatever. However, you have to understand, as this man just mentioned, yeah, exactly. 80% of US currency was printed less than 5 years ago. Spot on. Most people don't realize that. They don't understand that. So they may see and they may hear headlines like, oh, the stock market is up. That means the economy is good. No, people are starving. People are literally drowning in debt. Why? Because they need people to be enslaved in debt in order to perpetuate the debt-based Ponzi scheme to prop up the market. However, we're seeing that all of these large institutions, large countries, they're doing what they can to hoard hard assets. And they're essentially using all of this different distractions, whether it's meme coins, random tokens, to provide a liquidity off-ramp to rug pull you. So when I think about systems and I think about everything that's going on, that's kind of what I'm seeing. Following the money, following the global shift in the actual regional order, blocks, regional blocks. You have the BRICS. Those countries are as sovereign as they've ever been before. You know, I'm an American, clearly born in America, live a great life. I'm thankful. However, it's very clear that other countries have more power than they've ever had before because they have more power over their money. They can't be forced, as they were in the past, to have to denominate trade in the dollar. And essentially, the stable coin legislation and everything that's happening is essentially a way to perpetuate the dollar rug pull and Ponzi scheme to then use everybody in the world to then take their money and to steal things from them. However, if you see that number go up in your account, you think, I'm getting richer because I have more dollars. No, those dollars are chasing the same goods and the prices of those goods are going up because, as my man Went to Work said, 80% of US currencies have been printed within the last 5 years, period. That's a fact. And it's not going to stop. It's not going to stop. They've made it clear that if there is a downturn, they will pump money into the system and do whatever they can to cast the illusion that everything is okay. And honestly, this is a bipartisan thing. Essentially, everybody's stealing. They're all stealing. Everybody's stealing. Every politician knows this has been happening since the beginning of time. This goes back to every single empire. This goes back to the British Empire. This goes back to the fall of the Roman Empire. This goes back to biblical times. That when the money is debased, people are being robbed of their life's energy. A gold coin from 2,000 years ago is the same gold coin today, denominated in whatever currency is the medium of exchange by force by whatever empire which is dominating the world. Period. If my grandfather gave me a gold coin, that gold coin is still a gold coin. If you have one Bitcoin is one Bitcoin. If you have one silver is one silver. But $1 does not buy you a dollar's worth of goods years from now. Mathematical fact. And that's something that people have to understand, the difference between currency and the difference between hard money. And that illusion has blinded a lot of individuals from the mathematical fact that is taking place right before our eyes. Exactly. There's only 21 million. And a lot of people will say, well, hey, like the price of Bitcoin is $100,000 or $109,000 or $99,000. Bitcoin is fractional, right? Like just for those that may be interested, Bitcoin is very interesting because there's fractional units. So essentially for every one Bitcoin, there's 100 million Satoshis. And fun fact, if you look right now, one fart coin is worth about 25 cents. They just phased out the penny this week. They're not even producing the penny no more. But one fart coin, which is a made up meme coin, is worth a quarter, 25 cents. So when I think about it, that one fart coin is worth 25 cents. One Satoshi, which is a subunit of a Bitcoin, because there's 100 million Satoshis in one Bitcoin, is worth about 0.001 cents. I believe that one Satoshi, which is something that can't be manipulated and debased because it's algorithmically programmed into the time chain, which is Bitcoin, which is a purely decentralized ledger and is distributed money, secured and bounded by energy, mathematically bounded by energy, thermodynamics. I believe one Satoshi is going to be worth more than one fart coin, because one fart coin is worth 25 cents. So when people say, well, I can't buy Bitcoin because it's expensive in dollars, yo, you can buy Satoshis, you stack. If you're going to work every day, you want to save in the hardest money. If you don't like Bitcoin, you should be buying gold. If you don't like gold, you should be buying silver. And for the record too, that paper gold ETFs, that's a psyop. Don't buy ETFs with gold. If you want to go buy gold, buy physical gold to protect yourself. Go buy silver. Buy Bitcoin, put it in self-custody, take it off exchanges. It's yours. Nobody can take it from you. But that's essentially the difference between currency and hard money. A lot of people will get real out of shape and emotional when they hear someone mention Bitcoin because they're like, oh, Bitcoin's a scam. Okay, well, then I'll ask them, do you own gold? And they'll say, well, no, I have a 401k. Okay, you realize that your 401k is losing purchasing power because dollars are melting every single day. Millions and millions of dollars, maybe billions of dollars are printed out of thin air. Anybody that goes to get a car loan, printed money. Get a credit card, printed money. Get a mortgage, printed money. Hell, you can get a buy now, pay later loan to buy a Chipotle burrito. You feel me? Like, and yo, the thing is, I'm not even hating on a 401k. Like, I have a 401k, but I understand the difference. But I put in what I put in my 401k to get my match. Outside of that, I understand the system, but that's just me. Everybody has to do what makes sense for them. So I'm not even trying to come down on 401ks or anything like that. I'm really just trying to explain to people how currencies melt by design and that hard money gives you more purchasing power. The goal should be to accumulate as much hard money as possible to protect you and your family. You have an obligation to essentially protect your family. And this system that we live in, with all of these dollars being printed out of thin air, is an illusion. You have companies that make no profit in OpenAI. And we know that there's other AI companies like DeepSeek and other models like Quinn and everything and Claude and Anthropic that are really powerful and actually somewhat better than OpenAI. And OpenAI is aiming for $1 trillion IPO. So $1 trillion IPO is absolutely ridiculous when a couple years ago we had the first $1 trillion company, which was like Apple. Now it's like every week there's another new $1 trillion company. So what does that tell you more about the efficacy or the strength of currencies as opposed to these companies being really productive to actual society and humanity and civilization? When you build companies on paper promises and illusions, It concentrates the money or the power essentially in a fiat-based system, which is printed currency, into the individuals that have the most assets. And everybody else starves. It's a fact. But most people will be in a box and they feel like that box is stability, but you're being robbed day by day. If you don't believe me, read some books. Check out The Creature of Jekyll Island, which talks about a historical context of the Federal Reserve. When you understand the history of the Federal Reserve and how the system within America is essentially copying the system that was essentially perpetuated in Europe, which led to the downfall there, you'll understand it. When you think about every single war that has occurred since the beginning of America, do you think these wars were just funded by like accident? No, it's printed paper. Back in the day, in ancient times, if you wanted to have a war, you had to either tax your people or you had to essentially just have gold. The king had to have gold. The queen had to have gold. And then you would have to pay those troops to go to war. But when you can print money out of thin air, it's pretty easy to fund forever wars. It's pretty easy to just pay for anything. You're going to pay for it. It's crazy. But most people don't understand that. Historical facts, historical context. I employ everybody to go look at some of the history of civilizations. There's a great YouTube series called The Hidden Secrets of Money on YouTube. There are 11 videos that will change your entire perspective on monetary systems and understanding the monetary system and what that means. But if you just read the headlines, S&P's up today, cool, I'm chilling. Nah, man, it's a box. It's really a box. So honestly, it's just kind of one of those things. You got to really self-educate. You have to really go learn. You got to go do the knowledge and understand this stuff and understand that currency is paper and that money can't be debased. Real hard money. When you look at the news, to kind of go to one of my topics that I want to talk about is this 50-year mortgage thing. Most people will say, yeah, 50-year mortgage. Okay, hey, I'll finally be able to buy a house. Nah, man, like that's a mortgage. That's intergenerational debt. You feel me? Like that's essentially your grandchildren and your great-grandchildren inheriting a mortgage debt. Tazi, what's up, man? Yeah, what's up, Tazi? It's crazy. A 50-year mortgage. It's just debt. You know what I'm saying? Like, you never really see more houses being made to be affordable. They will make debt more affordable to make you a debt slave. That's essentially all it is. That's essentially all it is, right? Like, I'm a religious person. I read the Bible. In the Bible, it talks about usury being evil. Usury is essentially taking advantage of somebody with interest, high interest, predatory interest rates. That's normalized. Get a credit card, 30% APY, 25% APY, normalized. You really want that? Hey, here's this credit card. Usury. Same, yeah, 50-year mortgage. It is debt slavery. And essentially what they do with that 50-year mortgage is essentially package that mortgage up, securitize it like they did in '08 or pre-'08, and sell those mortgages to other individuals. 50-year mortgage is essentially another way to bail out banks. It's just bailing out banks, you know? So at the end of the day, like, you have to really understand what's going on and understand the system, that the debt is what perpetuates the Ponzi. The debt essentially makes younger generations feel like, hey, I can get a 50-year mortgage and I can finally afford a house. And then it allows the boomers that have properties to not really lose their house. But there will be a day when there will be a correction. And you don't want to end up on the other side of that equation. For me, when you look at charts, when you look at price a house, look at a chart. Ask ChatGPT to give you a chart or to give you a summary of the change or in the price of homes, pricing homes over the past, like, let's say like 7 years in gold. Denominate the prices of houses in gold, which is a hard money, and you'll see that the prices of homes have fallen. Denominate the price of a home, the average or the median house price of a home, in Bitcoin as the denominator, and you'll see that prices have been falling when denominated in Bitcoin. But if you price a home in dollars, of course it's going to go up because everything inflates up in a dollar-based system. Period. So you want to always make sure that you save in the hardest monies that protect your purchasing power. Honestly, you may be a person that's like, why would I want to buy a house? I'll buy whatever house I want when I have enough sound money, and then I'm like, I want to go buy a house. Cool. That gives you freedom because you're not like a slave to the system. Most people will think that like, oh yeah, my house is an investment. Of course, there's a lot of different theories and things that people have, but I know for a fact that when my grandma bought her house, she didn't pay nothing for it. It was really cheap. Her house is worth a lot now. And if she sold that same house today, she would never be able to buy that same house in the same neighborhood. That's because the system is designed to inflate up. So it's like really weird when you understand the difference between paper currency and hard money. And that's really what I'm on a mission to do, is to really show people these facts backed by actual mathematics. It doesn't mean that you can't own a stock. Own whatever you want, but you really want to make sure you prioritize hard money, which is essentially giving you more purchasing power. Because at the end of the day, you can look at anything that you buy, whether it's sending your kids to college or sending them to daycare, buying diapers, buying food, you name it. The price of everything always goes up. Not because the quality of the things goes up. It's because the value of the dollar and the currencies in which we denominate everything that we do is losing value. And essentially, the system is robbing you of your life's energy day by day. And yeah, you kind of have to take these life rafts very seriously. So at the end of the day, that's kind of what I wanted to break down, is understanding what's going on with the macro picture. I think I'm going to definitely continue to do more of these live sessions and answer questions. But listen, if you take anything away from what I'm saying, understand that sound money is what gives you more purchasing power. Read up on the hidden secrets of money. Watch that video. Check out The Creature of Jekyll Island, which is a great book. And if you want to understand a book about Bitcoin and sound money, read The Big Print by Lawrence Lepard. That's one of my favorite books. There's a lot of resources and stuff. And hey, listen, if you have any questions, shoot me a DM. Really what I do with my team and what we're building here at SentMe is helping individuals understand how they can be financially free. I always say that financial freedom leads to, or freedom advice, freedom literacy leads to sovereignty. Financial advice, it kind of makes you subservient within a box. And really what I'm working on doing with my team is making sure that we're allowing individuals to see the full scope of what's going on in the system to be able to protect themselves and their families. So thank y'all for listening. I'm out. Peace.